Hey, what's going on, y'all? Hope everyone's having a fabulous day. If you haven't gotten a chance to subscribe to this channel, please do so. I want you to ring that notification bell. That way, when I drop a video, you'll be notified. This video that I'm about to make is probably going to be one of the most important videos that I've made revolving around personal finance or credit. Any video that I've made in the past on this channel. The reason being, when you look at FICO scores, the category that carries the most weight is how well you pay your bills on time. Being in the personal finance space, I think it's important for me to talk about how I structure my money so that I make sure that I pay all my bills on time. And if I show you guys this, if you guys stick around, what I'm going to do is I'm actually going to do a deep dive on what I made last week and how I do this same cash flow strategy. That's what I call it, my same cash flow strategy that you guys can use to help put you in a situation where you don't really have to worry about your bills. You know that your money is taken care of, that you have enough money to pay all your bills, and you're not going to get any surprises. The first thing I want you guys to understand, I've talked about this in the past, is when you guys are setting up your financial institution, when you guys are, I want to say, do business with the bank, a lot of times people will go to the Chases, the Wells Fargo. When you're talking about doing a strategy that I'm about to teach, it's very, very important that you go to a financial institution like a credit union, because they're not going to charge you fees. The reason why that's important is I'm going to have you set up 4 to 5 different checking accounts. And if you do this with a Chase or a Wells Fargo or something like that, not to pick on those banks, but this strategy that I'm about to show you is going to be really expensive. I'm showing you guys this so that you guys, like, I bank with Navy Federal Credit Union. They don't charge me. If you want to have 10 bank accounts, you can set up 10 bank accounts. They're not going to charge you for it. If I tried to do the same strategy with Chase, chances are the fees are going to be really expensive unless you have a large amount of money and you could become a private client with Chase. I'm not going to get into that. But unless you're having over $150,000 with Chase, chances are this strategy is going to be expensive. The very first checking account that you establish is with a credit union, where your checking accounts are going to be free. And most people have this strategy set up because more and more checking accounts or financial institutions are starting to understand that people don't want to pay fees for checking accounts, because you have all these online banks like Ally and Sophie Bank that you can go to. Heck, you could go to a Fidelity or a Charles Schwab and set up an account with them, and they won't even charge you. It's not hard to find a financial institution that will not charge you to implement these strategies. So don't worry, don't be intimidated by the amount of accounts that I have you set up. Focus on the strategy that I'm trying to get you to understand and implement, so that you know that when it's time for you to make a payment, that the money is there and there's no worries. I don't care if you make $10,000 a week or $1,000 a week. This strategy that I'm about to show you is going to work for you. I'm not going to say I guarantee it, but I know if you set this up and you only have one checking account, this is going to be far better than any other strategy that you have. So the first account that you want to have is your hub account. The hub account is where all the money comes into. But like I said, most people have that one checking account. All the money comes in. Where they go wrong is they pay all their bills out of this hub account. You're not supposed to pay bills out of your hub account. The hub account is just for money coming in, and that's it. Now, once that account comes in, you want to have all these accounts set up with the same financial institution, because if you have like one with Navy and then you go with your local credit union, when you transfer money, there's going to be a lag, like 2 to 3 days for that money to hit that other account. So you have one financial institution. Hopefully they have some type of app where you can look at it and you'll be able to see exactly what's going on with your money. It's not a budget, it's a cash flow strategy. Okay, so the money comes into your hub. Now, once you have that account set up, you want to have another account set up to pay your necessities out of. Now, necessities, what do I consider necessities? Necessities are, like, let's say you have a mortgage, a rent, your auto loan, any insurances. Let's say you have life insurance. Let's say you have health insurance and you don't have health insurance with your job and you have to pay health insurance yourself. Your auto insurance, all these necessities like utilities, your phone bill, you want to put that in this category. And what you want to do is you want to add this number up. I'm just going to use hypotheticals. Let's say you get paid $4,000 a month. You take home $4,000 a month, basically $1,000 a week. We're going to just use this as a round number. What you want to do is, you get paid $1,000 a week. Let's say your necessities for that whole month is $1,000. You divide that $1,000 by 4 because there's 4 weeks in a month. $250 per week every time you get paid need to go into your necessities, because you know how much your necessities are. You already added them up. So you put $250. Now what you want to do is you want to automate your necessities account as much as possible. Your auto loan, your insurances, if they can take the money out automatically, you don't have to worry about making that payment. All you have to do is monitor to make sure that the payments are being made. Like your utilities, chances are you can't automate utilities. You're going to have to go in, or however you pay your utilities, you got to go in and make that payment. You can't automate that. So obviously you got to take that money, but it's already there because you put the money there. It's already there at the end of the month when it's time to make that payment, because you've been putting that money there every week. That's what the necessities account is set up. So you have your hub account. The money comes into your hub. Let's say you add up all your necessities and it comes out to $1,000 per month. You divide that by 4. That's $250 that needs to go into that necessities account. The third account that you want to set up is your debt obligations. Okay, your debt obligations account is your credit cards or personal loans. These 2 accounts are just strictly for those 2 accounts. Very important that you have that separate from everything else, okay? Because this is your credit score. This is going to determine how fast you can get to the 700s. Personal loans and credit cards are really important to make those payments every month on time. You might be able to finagle those others like utilities. You're late on utilities, chances are they may not report. If you're late on your auto loan, yes, they will report. I don't put the auto loan in this category. I put it into my necessities. Okay, so this account is for personal loans or credit cards. This is your debt obligations account. So now you got 3 accounts. Let's say your debt obligations came to $1,000 also. You get paid $1,000, right? You put $250 into your necessities account. You put $250 in your debt obligations account. You added up all your credit cards, your personal loans, you divided it by 4. It came out to $1,000 total every month. Divided by 4, it's $250, and you put that $250 in every week. So every time you get paid, you get paid 2 weeks, you divide it by 2. Okay, this isn't hard here, but that's how you handle these 2 accounts that I have. You have your hub account, you have your necessities account, you have your debt obligations account. Now, the 4th one that I want you to set up is your membership account. These are your memberships. These are your Netflixes, your Hulus, stuff like that. These accounts are their own category, because if you ever need to make a cutback, this is where you're going to make your cutback. So I want you guys to look at your memberships account as a completely separate than everything else. All right, don't commingle your membership account with your necessities, or your loan account with your necessity, or your debt obligations account with your necessities. You want to have all these accounts separate, so that when it's time for you to make a cut somewhere or something happens, you know exactly where to go to make cuts. Now, you notice I didn't put food in any of these categories. I don't put food in any of these categories because when you, I'll give you a perfect example. When I went to California, I went to Taco Bell in California, and I bought 3 tacos and it came to $15. In the South, it's like, for that same meal is like $7. So my and probably you guys are the same way. Even if you don't travel as much as I do, your food bill on a week-to-week basis fluctuates more than any other category. Your food bill, right? I just put that as with my money. I pay food out of my money, because there's going to be a bank account just for me that I can do whatever I want. If I want to go to restaurants or what have you, I use this, my account, right? My account to to do all those other things, entertainment, stuff like that. So you have the 3 accounts, you have the hub account. Get paid, you put $250 into your necessities. You put $250 into your debt obligations. Let's say you added up all of your memberships and it came to $400 per month, right? All your memberships came to $400, your gym membership, all these different memberships you have. Well, you know you need to put $100 a week in every week, right? You need to put $100 in every week. So that's $600 out of your $1,000, because I'm saying that you have $1,000 a week that you got going into your hub account every week. 250 into your necessities, 250 into your debt obligations. Now you got $100 a week that's going towards memberships. So this next account is your account. This is where all the money that's left over, this is where this money goes, right? This is where the money goes. But it's important for us to talk about retirement, because far too often we sit here and we talk about we want a good retirement. We don't want to work into our 70s or 80s, and we want a good retirement. Right now, you could put about $6,000 into your Roth IRA every year, right? $7,000 if you're over the age of 50. So if you're able to put $6,000 in a year, that equates to about $115 per week. So once you get paid, you want to put that $115 a week away into that retirement account. We also have to take care of a rainy day fund. What do we do with our rainy day fund? How do we work this out? Well, in my situation, what I would do if this were me is, okay, well, I'm going to take $50 a week and I'm going to put away into this rainy day fund. Now, once you did all this, everything is already set up. You have your bills taken care of, your credit cards are taken care of, you have your retirement taken care of. Now, the only thing you have left is food, right? Food and fuel, right? Now, if you want to take the fuel and you want to take the fuel because you know exactly how much you spend on fuel every week, you could put the fuel with the necessities. So every week, what you want to do is you want to add up all these accounts, these different accounts that I'm telling you, and you want to distribute the money out of the hub account. Don't pay bills out of your hub account, but you want to distribute money out of the hub account, and that's where everything is going to go to. What I'm going to do now is I'm going to actually show you guys my paycheck, right? I'm going to show you how once I get paid, how all this works. But understand that as a truck driver, what happens, I want you guys to understand how I get paid first. I will do a load. Let's say I do a load from California to Louisiana and it takes me a week to do. I'm just doing hypothetical numbers. What I do is I submit my paperwork to a factoring company or a financial institution. And what they do is they take my bills and they pay me. If I got paid $1,000 or what have you, they'll subtract 3% from that $1,000 or whatever it is that I'm getting paid. They'll take 3% of that and they will give me the rest of the money. So they're paying me, I pay them 3% to give me my money, and it takes about 2 days. Otherwise, what will happen is it will take about 30 to 60 days. Sometimes it'll take over 60. A lot of you truck drivers know what I'm talking about. It'll take over 60 days for you to get paid on a bill. To cut all that out, I have a factoring company. I pay them 3% off of everything that I do, and I look at it as an employee. A lot of truck drivers go, I'm not paying nobody. Well, I pay a factoring company and I treat them like my employee. So what you want to do is you want to understand that when I show you these numbers, it's on a weekly basis, and I'm going to show you right now exactly what it was that I made last week. So this is my last week's totals. I'm going to make this really quick. I'm not going to drag this part on, but this is my actual numbers for last week. As you can see, I created a Google Sheet so that I will know exactly how and where to put my funds on a weekly basis. As you can see right here, my gross income is $6,575. That's what I grossed for last week. That's what goes into my hub account, is this $6,575. Now, don't get caught up into the numbers. I just want you to see exactly what I do when I submit my numbers every week. So my 6575 comes into my hub, and on a weekly expenses, as you can see right here, this is the name of the accounts that I use for each account. So my office operations, that will be equivalent to like your memberships. My accounting softwares comes out of here. I have my truck internet comes out of here. There's quite a few things that comes out every week. So I add up the total, and on a weekly basis, it comes out to $129.55. So once the money comes out into my hub, I know automatically I need to transfer $129.55 into my operations account, my office operations. In your account title, it will be equivalent to your memberships. Now, I have a separate account that is for my maintenance. A lot of you truck drivers know that we have a lot of maintenance on our trucks, PMs, tires, stuff like that. I have all that in one account. Every time I get paid each week, I know that I'm going to put $500 into this account each week. So I have another account for my taxes. Every week I have $200 taken out of my hub account and put into taxes. Future payments, this would be equivalent to what I called your debt obligations account. I call that future payments. You could call it what you want, but this is a loan for business that I have that I took out, and I have to pay $232.55. Now, I want you to understand, this is how I structure my payments. What happens is this is only $600 or something like that per month for this loan. But what happens is, because I want to pay my loan off early, what I do is I structure it so that I pay $1,000 per month. So every time $232.55 comes into that account every week, I know once I get paid, I take this money, put it in here. My payroll. Now, to go back to future payments, I just want to let you guys know that when you guys are doing business and you guys are putting business loans and stuff like that in your name, you're personally liable. I'm going to be talking about business credit in the future, but I want you guys to understand that there are ways that you can build your business credit up to where you can actually get loans just in your business name. This is one of them. Okay, so my payroll account, you're going to see these two accounts. Most people think payroll and distribution. I'm actually giving you guys a business course as well. So my payroll is $1,100. This is what I have ADP go into my bank account, and they pull that out, create a W-2 for myself, and that's what I pay myself on a weekly basis, $1,100. Now, I want you guys to understand something about this payroll. When you set up your LLC, a lot of times people think that you have tax benefits when you set up an LLC, and there's really no tax benefits to just setting up an LLC. I'm an S Corp. I'm not going to talk too much about S Corps. Talk to your accountant about the S Corp. But the way that I have my money structured is, if anyone ever asks me for W-2s or need to see my taxes, I actually show that I pay myself $1,100 each week. Now, this distribution that I also pay myself each week, that comes out of a completely different account. I have a payroll account where ADP goes into that account. They pull out $1,100 out of that account and deposit it into my personal checking account. And then I write myself a distribution check for $600. For you, if you don't understand this strategy, what I'm doing is I'm legally avoiding self-employment tax. On your tax, you pay 7.3, I want to say it is, on your paycheck, which is your unemployment, Medicare, I think it's something, and Social Security. Well, if on this 600, I don't have to pay that 7.3% on this distribution. That's why I set it up that way. If you, like I said, you want to know about S Corps, we could talk about S Corps, but this is a real life snapshot of why you want to set up accounts different so that you're actually using the tax guidelines in your favor. Okay, and so truck operations, my truck payment is $387.28 a week, and my insurance is $363.32 per week. Okay, so my fixed costs, and like I said, I created this sheet, but my fixed cost is $3512.70, right? And now I want you to understand this $2731.28. That was a lot of fuel for this week that I spent. Now, I paid all my bills. I even paid myself. That still left me with a $331.02. What do you do with this $331.02? I have a separate account called savings for my business bank account. All these seem like a lot of different accounts, but what it does is whenever I look at my business bank account and I need to pay like my IFTA, every quarter we have to pay IFTA for our trucks. I know the money is sitting in there and it's going to take care of my IFTA. Those of you wondering, well, what about my personal taxes? Out of this $1,100, ADP pulls out taxes for my personal. This is the way that I set my account up so that I don't have any problems going down the road. Now, you might say that this is just a little bit of money each week to put into a savings account for my business. This is strictly business. This is not my personal. My retirement comes out of this $1,700 per week, right? My health insurance comes out of this $1,700 per week. And all my personal bills come out of that $1,700 each week. I don't worry about my business savings. This savings, this $331.02, that's for business only. Each week that I have a surplus, I put in there. Now, those of you that say, well, what happens when I take off? Well, what happens is I take the savings that's built up and then I apply it to all these accounts, right? I take the numbers and apply it to all these accounts, and I never run a deficit, right? Because I'm building up my savings each week. So if I ever need to take off a week or whatever, it's never a problem to put in for the week. A lot of times people say, well, I do my numbers on a monthly basis. Great. Do whatever system works for you. I know that this system works best for me. I wanted to give you guys a quick snapshot on how the money works on my account. Spreadsheets, can't say enough about them. I love spreadsheets. I try and make a spreadsheet for everything. If you can, what I would do if I were you, I would set up a spreadsheet, go on Google, create a Google sheet. It's free, and set up something to where you can put all your expenses in and just label them to which account they're supposed to go to. Every week, you're not going to have to budget. You know the money is going to be there. You're not going to have to look into your account and figure out where you need to take money from. That's why I set this system up. I hope that this video helps you. I hope that this prevents you from running into situations where you're running late on bills, you're running late on paying things. If you have a system, if you have a good strategy, not a plan, but a good strategy, your plan is gonna come into fruition because all you have to do each week is implement your strategy. All right. Well, I hope you guys stay blessed. I didn't want to make this video too long. I'm gonna catch you guys on the next one. Talk to you later. Bye-bye.